Good morning and welcome to 10 minutes at 10 for everybody. And today we are going to talk about sales, or more importantly, sales that you're not charging for and therefore losing profit or leaving profit on the table. So there are two things that we're going to talk about today. So one is not charging for extras, and number two is charging everybody something extra at least once. So Harry, what do we know about charging people for extras?
Well, ironically, charging for extras is one of those things that I would say everyone is partially guilty of somewhere down the line.
Including us.
Yeah. Especially if you're a service-based industry as well, it becomes really, really abundantly clear that you may have some customers who you are over-delivering on services and not charging them for stuff which is actually outside of the scope of the contract. So you're missing out on this extra income. And as far as profit hacks go, this money is literally sitting there ready for you to claim. You just need to make sure that one, you can identify it, and two, you can capture it. So
before it's too late.
Yeah, definitely before it's too late. But actually, we'll be covering a little bit on that when you feel like it's too late anyway. But the first thing is, do you have a gut feel about any of your clients? You probably will know if they're getting away with getting free extras quite quickly. It's generally a gut feeling. Maybe they're asking for too much. Maybe you're just jumping at their beck and call a little bit. It's one of those ones that you can fall into a bit of a spiral with. But the main thing on these ones is, one, do you have a contract? And two, what's contained within the actual scope and the content of the contract in place? So are you making it clear what is included and what's a chargeable extra? If you're not, strongly recommend you review your contracts and have one in place. Really, really important. You need to make sure that you have the contingency in place. If they do ask for extras, you're in a position to charge them. So then we need to identify what the client actually asks for. Are they asking for anything in particular? Are they asking really frequently? Is it something that actually you think, this is actually a separate chargeable service? And in which case it might apply to more than one client.
Yeah, it's really difficult to get into the habit of, when somebody asks you for something extra, it's really difficult to get into that habit of saying to yourself, right, okay, is this part of the original service and scope that we've already agreed? Or is this not? And is it an extra? Is it a chargeable extra? Or is it something that you're going to make a conscious decision that you're going to do for free? And the problem with service-based businesses is that we often just do too much for free. So the client will say, can you just do this? Can you just do that? Or while you're there, could you just? And it's too easy to say, yeah, sure, I'll do that. And, we're particularly guilty of it in our business. We work on, a fixed fee basis, and this is one of the best but worst opportunities for this kind of thing to happen. And what does tend to happen is that you'll deliver the service that has been agreed for, and then somebody will just say, can you just do this? Can you just do that? Can you just, add something else in? And you do it once or twice, and then it becomes the norm. And then it becomes very difficult to unwind that. And all of a sudden, the profit margins on your contract are getting pinched more and more because you haven't taken the moment to stop and say, yes, sure, I'll do that, but it's outside the scope of our contract. Let me find you a price for that. Or yes, I can do that. I'll send you a quote for it. And then it's really difficult because when that kind of question is asked, it's usually because something is needed urgently and it's needed today. So you do it today, but you don't think about charging for it.
Yeah, and then it's missing out or not. Basically, the main reason people miss out on this is because they simply don't know how to ask for more money when it comes to these additional items. And because the client's got a short pressing deadline, you're more inclined to just do it for the sake of actually covering your costs. So the point about this is to have an honest conversation with the client. So start by gathering your information so you actually know for certain that you genuinely are basically giving away extras. So have a look. Are you time tracking? Do you have a way of measuring any of the extras that you're charging for? Particularly in service-based businesses, we'll know based on our time tracking. It's one of the inbuilt functions we have so that we know exactly what we're doing.
Not everybody time tracks, do they? So sometimes it's just a gut feel.
Yeah, you'll know.
Yeah.
You'll know.
If your contract is clear enough that X, Y, Z is in there, you'll know when they ask for ABC that it isn't. But you have to make that decision to say to someone, actually, yes, I'll send you a quote for that. And if you don't do that at the time the client asks for it, you miss the opportunity, and then it's much harder to go back later and invoice for something that you've done which is out of scope. Now that comes down to the client relationship that you have. So some people would be more open to being charged for something that you've done extra. They'll just accept that, you know, they asked you to do something extra and it's quite reasonable for you to charge for it. Certainly in our business, we don't charge extras for anything that's been done unless we've agreed the price beforehand. So it's super important to have a process in place where you can either quote for that or have a product set up for that. So 2 examples that we use, which are quite unusual for accountants. We have simple products set up on our website. So if somebody asks us for something, we can say, yes, that's fine. Here you go. You can just buy that extra service and you can pay for it as a one-off and it gets paid up front, which takes away your cash risk. Or we quote for it. Now, the quoting process takes a little longer, but there is a very simple quote process in Xero that allows you to set up a standard product and then just raise a simple quote, send it out to the client. And if it's important enough to the client, they'll sign it off and accept it. And if it's not, you don't need to worry about it, and you don't have to worry about the time wasted because you don't have to deliver it. So it's quite a good settler, and sorts out the sort of wheat from the chaff.
It does. And if you set it so it's easy to ask them, easy to raise the additional issue with the additional cost, make it easy for the customer to agree the new cost. So like we have a one-off product in our store, so it's a really simple process, and it's very easy for the customer to pay for the new cost. So it needs to be easy to ask, easy for the customer to agree, and easy for the customer to pay.
Yeah. And if you're using something like Xero or QuickBooks to raise these quotes in, you can just set the products up as standard products. They don't have to be physical, tangible things that you can touch, but a product can be a service, and you can set them up as standard. So it's literally as easy as going into your software, raising a new quote. This is the price that you've agreed, send it out, and then that filters out whether the client really wants you to do that or not. So have a think about what you're doing as an extra that you are not already charging for. So you might have to sit down and map out what you're doing. You might have to take a step back and think about the last time somebody asked you to do something that you weren't expecting to do, or is perhaps a little out of scope, or is perhaps a little difficult. Quite often clients will ask you to do something that's new, and actually it might not be a regular service that you've done before. It might even take you longer to deliver, which means you're even more profit negative because you've done something that you've also had to learn, or you've had to take more time out to deliver. So that's something else to watch out for. The price barrier is really important. So make sure when you do have somebody asking you for a new product, you do say, yes, that's fine, let me quote you for that. And that's a key part of this process, is to make sure that you always accept their order for a new product or new service, or the new task that they want you to do, and say, yes, I can charge you for that.
And remember, if they don't want it for one reason or another, it's clearly not as urgent as they first gave off if the price is a barrier. So also remember, that's time saved for you. You can sell that time elsewhere. So really important, the price barrier can actually be really beneficial to you as a time saver.
Yeah, and I think that's one of the things that we've seen in the past. We've often had clients ask for a complex report or a particularly complicated cash flow. So you go away and you do that, and then you send it off to them, and then a week later, how was the cash flow? Oh, I haven't looked at it yet. Oh, I didn't need it after all. It's also massively important, so that you don't waste your time, that you really understand whether the client actually wants that, or when it's not just something that they've thought, oh, that'd be nice to have, and they've just asked off the cuff. So they won't value your time enough if you don't charge them for the things that you're doing. It becomes too easy to do, plus this. So another example is actually in the quotation process as well. I had a conversation with a new client yesterday. I produced a quote for this new client. It was going to be based on, I did a review of their Xero account. I gave them a list of things that were not working as well as they could be and needed to be fixed, and I gave them a price for it. They accepted the price. They accepted the order that I'd sent out and the quote that I'd sent out. So that was fine. And then just at the end, they said, oh, by the way, I'd like to include cash flow forecasting and budgeting. But that's actually a huge project and a huge task, because this is quite a big and complicated organisation. and they just thought they could tack it on the end. So I'll have to go back and I'll have to re-quote that. But if somebody asks you at the point of quotation, that's another opportunity for you to say, yes, I'll send you a quote for that, or yes, I'll include that in the quote. Yes, I'll amend the quote. But don't say, yeah, sure, I can do that, no problem, without thinking about your time and effort and the cost of doing that in the process. So really, really important.
Now, another tip for today is, it also relates to sales. Can you sell one extra product to one existing customer? So essentially, we're talking about cross-selling here.
Or upselling.
Exactly.
Depending on what how you want to term it.
So what we would suggest in this one is a traffic light system. So review your clients, and basically we're going to go for greens for any who are fully on board with all of our products, our services. They're paying for everything we use. Paying for everything we use being the important one there.
So basically there is nothing more that they can take, and they are a perfect client with your full services, so they're green. So what you can do in this instance is take your list of clients, or take your list of sales invoices, export them into Xero, or into Excel rather, or print them off and use markers, use a traffic light system in Excel, however it feels more comfortable to you, but have a process of reviewing each of those sales. Really, really important. So what does orange mean? What do you do for orange?
So orange will be with the clients who we have a small potential to have an upsell or a cross sell of some sort. So they might not quite have your full listings of products and services, but there's potential for you to review some of the other services and see, actually, you might benefit from this. And then it gives you a bit of a workflow. Now, reds are those customers who have big gaps. They've got huge potential for upsells. They might be a bit of a trickier upsell than someone who, say, orange, who it's a bit easier to say, okay, actually, you've got these services. This complements that one really well. But it's really useful to identify the reds. And then from here, we've got a roadmap.
Yeah, so they're not bad clients.
They're not bad clients.
You've got a bad product mix that you're selling to them. So this is from your perspective. You haven't sold what you potentially could to that person. So we use the traffic light system quite a lot across the business, whether it be reviewing costs, reviewing sales, reviewing profitability in a particular area of the accounts. It's a really nice opportunity. So that your greens are things that are perfect. They're optimized. They're the best they can possibly be. The oranges, you want to move up to greens by putting an action plan in place, and the reds, you definitely need to move to oranges and potentially greens by taking action. But by color coding, coordinating, traffic lighting each of the customers in this way, you can then start to put an action plan in place to change the way you're behaving in your business, to put more profit in there. So it's a challenge to try and work out which client might take an additional product, and then change that upsell or change that mindset so that you are going to upsell, you are going to change that process, you are going to sell somebody something else today. So if you have a clear idea and a plan of who would benefit from what, who needs what in order to run their business more effectively, then you can map out who you're going to sell what to whom and by when, and then you can have a plan in place. Now that plan might mean phone calls, it might mean extra sales copy, it might mean creating new products or rebadging products in a different way, because that client is not aware of what you're already doing. So if there's something that you are regularly doing for other people that you think other clients would benefit from, you can then start to look at selling that existing product. So you're not developing anything new. You might badge it as new to them, but it's not new to you. So it's really clear to make sure that your customers are aware of everything that you offer that they might benefit from, and you're the best person to do that. So map out all the products and services that they would benefit from, and then aim to sell 4 lots of £25 or 4 lots of £100, depending on what your sales target is. And go into it with a really positive mindset so that you're not, they might buy. They might buy next week, they might buy tomorrow. If you change your mindset and you talk as if they've already bought it, and you talk about the benefits that the client is going to receive by buying that product that you already have, then it's a much easier conversation with them and much more likely for them to say yes.
So
I think one of the things that we often find is that almost everybody has a product or a service that their clients don't know will benefit from them.
Yeah. So what do you personally have that you could offer at, say, the price ranges we just mentioned to any existing customers? Remember, existing products, existing customers. Your client may simply not be aware of everything you offer, or may not be aware of necessarily the benefits of these other side products which you do offer.
Yeah, now a good example of that is me sitting on Facebook about 11 o'clock last night, and I'd been umming and ahhing about going on a course for digital content for some time. And I thought about it, and do I really want to spend the money? Do I not want to spend the money? But the guy who is writing the course sold out of his workshop, so I was, decisions made for me. I don't need to worry about it. Well, last night he messaged me at about 11:05 in the evening. It was a personal message. He's put on a new course in October. He's looked at my, he knows my offering. He's looked at my sales page, my website, that kind of thing. He thinks it will help me in X, Y, Z ways. So because he sent me a personal message, because he opened that conversation, because he made me think about what and how I'm going to benefit from his course, it was a much easier sell. And then he made me an offer, so I bought. And that was 11 o'clock at night through a personal message on Facebook. So sales are there to be made if you put the effort in and if you tailor that message to that customer, because you know what they want and perhaps they don't. So that's our 10 in 10 today. So thank you very much for joining us as we talk about sales, and hopefully we'll see you tomorrow.
Yeah, join us tomorrow for more profit hacks.
Yeah, more profit hacks. See you soon.
Bye.
And we're out of Facebook. We're nearly out of Facebook. And now we're out of YouTube.